This is Timely Options with your host, Nick Garland. Today is October 8th, and actually October 9th, I should say. It's a little bit late at night here. But I thought I might do something different. I covered my first few video podcasts here. Uh, I covered some trades that pretty much have already happened, and that doesn't really help a lot of people. So, you know, before I get into a trade, I do a lot of analysis on stocks, and I analyze patterns, and I analyze uh, momentum using indicators such as the MACD, which is the moving average convergence divergence line. Divergence study, and I also use RSI quite a bit, which is relative strength index. You know, so you know, right now what I'm looking at is FireEye, a pretty new stock. It looks like it opened in 2013. Kind of went nowhere for a while, or at least I can't really say nowhere. 35 to 40s to 45 is actually a pretty good range for a stock. But at one point went all the way up to 95 and then just tanked. Look at that. Can you imagine getting short at 95 on the 5th of March and then just letting it go all the way down to 25? I mean, that is just some crazy action. It looks like it just fell with the market because a lot of stocks actually fell around March 5th, 6th area, just started their descent all the way down. So what I'm watching here though is FireEye has just been trading in a pretty tight range here. I guess relative tight range relatively for the stock, while the MACD has recovered pretty nicely. Still a little bit negative here, but all in all, it's not as bearish as it was way back in May, coming off of that huge sell-off. I know that FireEye is a security, like a tech security stock. I'm almost not. I almost don't care much what the company is. It's going to be a new company. There's not a lot of history behind it. There's, it's very speculative. So as an investor, I don't know what I would do with the stock, but I don't really care about that. What I care about is whether or not it swings well, and looking back here over the last almost half a year, it has swung pretty well. I have the DEMAs right here, which are basically these moving averages that overlay right over the top of these candles. So the blue one is the 5-day, the 13-day is this yellow one. And whenever they cross, we zoom in here, whenever they cross over, if you get in around that time, FireEye tends to swing pretty nicely. And then it kind of gives you these clues that it's done. Here are some red candles, pretty neutral. Doesn't seem to be making new highs, just traveling sideways. So if you were to take some profits, and if you were to sell whenever you made a new low, then that would be a good time. And here we are again. The demons cross bullish, get in, ride it. I probably would have sold further back actually. Probably would have sold as soon as I got like a little red neutral candle on this stock. I probably would have sold here and missed out on all this, but I'm pretty. I usually ring the bell and take profits when I get them, and I'm very quick, I should say, to limit my losses. But just watching how the stocks have been behaving here, we kind of have, if you look at this, a little bit of a neutral wedge compression happening here. You see, this red line here is pretty speculative. But if we switch over to an hourly view, I guess I should explain this. So I try to find patterns on the daily chart. So here, whenever it rounds out against this bottom resistance, we get nice rounded bottoms. See, here we are again, nice rounded bottom before we move from, this is the 2750 area, and then all the way up to, it looks like it just tagged the 50-day moving average right here at 3380. But that's a great move. In just, gosh, not even 2 weeks, it went from 2750 all the way to up here at 30. What was the high on that day? Just shy of 34. So that's a great move. I mean, that's for $6.50 on what was originally, if you got into that trade, would have been a $27.50 stock. I mean, that's a great return, and especially since I use options, that would have been just a fantastic trade. But look at this now. The reason I'm talking about this trade in particular is that it hasn't actually played out yet. And what happens is, I usually, when it gets close to a significant area, I feel confident switching over to something like, here's the 1 month 15-minute chart. Okay. And look at this. You have a very clear resistance happening all the way down this bearish trend line. Even today. Yesterday was Wednesday. You had the Fed minutes released and a huge jump in the market, and FEYE just went nowhere. Well, it didn't go nowhere, but it certainly didn't break out of this bearish trend line, and it's been really bearish. I think what was it, a few days ago, Northland Capital came out on FEYE and said there's too much competition, and that they just kind of panned the stock, and interestingly enough, Piper Jaffray came out that same day and reiterated a $40 price point, and to me, the story behind that was some not so big firm comes out and shorts the stock. I think they shorted it, let's see here, right after Thursday, actually. last Thursday, the really bearish one, and FEYE had opened up early and went really high, and then just tanked, on what was otherwise a very, very bullish day for a lot of stocks. It just continued down. So recovered some, tried to break that line. I actually got an alert on this Tuesday morning, very first thing when the market opened, and it tagged it. And of course, the market was really bearish, and I just wasn't at my computer, but had I been in front of my computer at the time, right when the market opened, and I got that alert, that was an easy call to short this stock, especially in this bearish environment, or what was a bearish environment, and pretty much that entire day just took a straight line, from 2960 area all the way down to finish the day somewhere around this 28 area. So that would have been a great short. Missed out on that, but hey, no big deal. So here we are. Interesting trade. If we speculatively draw a little compression line here, I mean, it could actually still paint this bottom resistance line, this green line here, for a couple of days. I'd be willing to take on a little bit of speculative position tomorrow if it just trades really neutral and ends the day around 28. Maybe a little speculative trade. This is something I'd rather just let tomorrow play out on FEYE and see what happens. Maybe it breaks out of this, Who knows? But I'd just be watching it really, really, very, very carefully on this stock, especially since going back to the daily, it takes a while. Let's go back here. Let's take a look at the 90-minute. So here we have the 90-day 1 hour chart. So here we have the 90-day 1 hour chart. Let me move it over. Too much time showing on it. Let's move this down to 50. Apply. There we go. Let's look at what happened last time. So last time, here's FEYE. You have this trend line, right? One trend line. Interesting that it actually came up to this, hit the 50-day, and then backed up all the way down and tagged this same prior bearish line. And sometimes you get a couple of bearish lines. They kind of act as a sort of a resistance, diagonal resistance. I like to color my trend lines yellow because it's a relatively neutral kind of color. This would have been maybe a more, let me see. I always try to objectively imagine that I don't know what's happening from this point forward. Kind of just travel back in time and imagine that this is all I could see on the eye. And what would I have drawn back then as a bearish trend line? So off of this, maybe we would have noticed that there's a curve, bit of a curve here. So let's draw something here, see if it lines up. It lines up. Yeah, look at that. That's actually pretty good. Yeah, here we go. So look at that. It's really nice. You have all these little intraday 1 hour candles, just painting a very nice curve. You have one of these aberrant 1 hour candles kind of at a little intraday spike here. Didn't get over that, as we'll use that as the beginning point. And then you have this again, just riding right along the curve. Okay, and this is again just speculative. What if I didn't know what was going to happen? What if I couldn't see all of this action here? And let me just pretend that I'm 4 or 5 days before we actually started going up. I would have drawn the line like this. This green line wouldn't have existed back then because I wouldn't know to draw that where the bottom and FEYE was. But just using this line, activate it, turn it into a bearish line here. Just using this line, let's see, I would have gotten a notice here, and if I actually bought on the alert, then I would have at 28.79, I would have then lost money. Lost money from, let's see, 8.25. Lost money all the way until about 8.27. I probably would be kicking myself, if I had bought on the alert and not let this kind of play out. But if I'd let it recover here and bought back in, it would have paid off. Would have kept on moving. So let's just keep that in mind here. Let's say that something similar happens. Let's say that today when the market opens, today Thursday, October 9th, let's say it makes a little break here, and then it just rides this all the way back down into, what day is that? The 10th. Okay, of course the 10th would be a Friday. Let's say it just rides, breaks a little bit and just rides that bearish trend line all the way down. Looks like this 2790 area actually is a pretty decent place. That if it broke out just barely and just rode down, that it would kind of bounce around there. So I would probably put on a speculative position Friday, around 12:30 p.m. And that's how I do a lot of my trading. I want the stock to just kind of round out a little bit more here, and it kind of makes sense if the stock does that. If it goes up a little bit and then pulls back some, what ends up happening is you get this much more nicely rounded bottom, and usually that means that you have a better chance that the stock is going to act in a more directional manner, that you're going to have day after day where the stock is actually moving up. And here's that 50-day. The 50-day here, as you can see, how the stock behaves around the 50-day is that it acts as support and resistance. So if on Friday I got in around $28, and then Monday and Tuesday and Wednesday it was just, going up and up and up, I would expect some resistance at the 50-day line. And what I would want to watch for is I would want to see if it traded neutrally against that 50-day line. I'd probably at that point, let's say, here we go. This is just how I think through some of these trades. Let's say this is a bottom here. And let's have it cross through Friday around 12:30. Okay, so let's just imagine for a second a scenario where it breaks out a little bit here, comes down on Friday, down to here, and then it's very bullish until maybe it runs into this 50-day line, which would maybe happen, who knows, the 14th. So when is the 14th anyway? A Tuesday. And then maybe let's say it just pulls back some. I would look at this speculative line and see if this line suddenly created an area where maybe it would just compress against the 50-day and then start another leg going up. And then of course I would get be very, very careful. Let's extend this to the right. Before it came up against, again, more compression up here. So let's say around 30, if it breached this line, I would actually be willing to not only sell my position, but maybe even put on a speculative bear call spread on this. I would sell a call spread, up here, maybe sell the 35 or the 36 call spread, one strike, $1 strike, and just collect some premium on that. And there are other stocks too. Solar City, of course, I've covered Solar City before. Deckers, I think, is a great company, and I think this stock is actually trading at, a really, really technically strong area right now for a reversal. But, looking at these DMAT lines, the momentum in the stock is so bearish that I would be very, very wary. I'd be doubtful of Deckers if it somehow makes a really, really strong move up tomorrow to, say, 91 or 92 even. I would actually expect it to chop some, just neutrally, especially since you have earnings coming up. I would expect it to chop. Even if it went up some, I think it would be pulled back down in the earnings, trading again around this 88.50 to 90, say 90.50 area or 90.60 area. So right on trading on earnings, which is 10.23. Now after earnings, very bullish on the stock. 10.23 is Thursday, so I mean, weeklies would be extremely risky at that point. But for me, I think that on the news, it wouldn't be uncalled for if Deckers, the next day was trading, opened up at the market, opened at like 95.25 or 95, If it were a good enough report, then it could even jump 2 zones all the way to brand new highs. It just depends on those numbers, but 95 is where I actually think that post earnings Deckers would end up, and if we had surprise news, then it could be up to new all-time highs at 101. But that was it. I just wanted to cover a couple of future trades. Deckers, I think, has some time to bake for a while before it starts reversing. And then we also have, like I mentioned, FireEye, which I'm just watching. I actually think FireEye, we're only a day or two away from a buying opportunity in FireEye, followed by a nice leg up in the stock. The only problem with that, since I'm an options trader, is that FireEye tends to have very inflated options. So be that, my strategy could be that I do something sort of synthetic where I sell a bull put spread, and then I use the credit on that to help finance or take off some of the premium of a position that I take on the call side for a weekly option, something like that, or any number of different strategies. Personally, I like to just do the simple equation here. When I'm looking for a technical reversal in a stock, then bearish or bullish, all I'm trying to do is, of course, buy low and sell high. Everything just turns into a complicated form of buying low and selling high. So that's it for tonight, and trade safe.